Thank you. We'll resume the meeting. We have had a lot of questions, many of which I've heard several times before over the last few months, but we will carry on. I have 3 listed, more to go, possibly 4. But that's your right to ask questions, and then we'll have a debate, which we haven't had yet. So the next question again is Councillor Fuli.
Kia ora, thank you. Yeah, just a question for the team, 3 questions. 1, how long have we as the public, as Aucklanders, so that I know the different district councils, including my own Mighty Manukau Council, how long have we as Aucklanders had public ownership of the shares? Number 2, over that time period, and I don't know if you're able to answer it, but over that time period, how much in dividends and in real dollars have Aucklanders received from the shares? If you can't answer that, then how much has the Super City since 2010 received? I think you can answer that from all of the shares, even after we sold some. And then just lastly, I've got a question about the process that happened last year, but I'll ask that after those 2 questions. Kia ora.
We don't have those facts to hand right at the moment. We have to go through and gather that. I think information may have been provided previously. We'll have to go and dig that out from workshop materials and responses. But yeah, there's a lot of historical information there that we don't have right at our fingertips, unfortunately. We can come back to you with those details. Yeah,
yes, please. Kia ora. I have asked that before, but I guess it just gets lost in the ether. My last question then is about the process of the sale last year. And I know this has been asked several times before in workshops and otherwise, but I don't ever see it written down clearly, even at the Audit and Risk Committee meeting I was at recently. Who bought the shares? I know that UBS, they were a financial advisor. Then they, made the unsolicited approach to us to buy the shares as a broker. But who bought the shares in the end? Because when you look at the list of shareholders, Auckland Council is still the biggest shareholder, even though we've only got 11%. But Australia are the second biggest. The Australian fund, super fund, are the second biggest shareholder now. So are you able to confirm who actually acquired those shares in the end? And I'm mindful of the comment that was made about it is Aucklanders who buy the shares and therefore Auckland continues to benefit. Kia ora.
As publicly traded shares, we can't know who bought them, and I don't think we've said that Aucklanders would. There was, yeah.
All right, that's all good. Thank you, Mayor.
Councillor Ferry, please.
Thanks. I just had a couple of questions that came up from the points about the land at the airport and capital growth and stuff like that. So can we spend or access any of that capital growth or land value for OPEX?
No, we can't. That's both would require. Actually, our revenue and financing policy does not allow us to access that for OPEX.
Okay, and the key issue we have is actually in the OPEX space from what I can tell. So also, just to clear this one up, I feel like John Bishop may have addressed this, but I just want to check. So when we talk about diversified investments, owning shares in one thing, does that or does that not constitute a diversified investment?
So that is not a diversified investment. That's the opposite of a diversified investment. By diversification, there is 2 ways to think about it. One is the type of assets and spreading the risk across just different types of industries. The other way is geographic, having all of your eggs in one basket in terms of a location in the event of a natural disaster. And so the council's current shareholding in Auckland Airport is not diversified either geographically or in terms of industry.
Okay, thank you.
Councillor Fletch, please.
Thank you, Chair. Mine follows on from the questions that were posed by Councillor Lee, and to a degree we have covered this in part in workshops, but I want to raise it today in terms of the fact that we're meeting publicly. Workshops don't have the visibility that they might. The background to the airport was the land was owned by the Montgomery family. It was acquired under the Public Works Act. But today, in addition to all the public amenity, and by that I mean the biosecurity and the immigration and the runways and those things, a vast amount of it is actually commercial enterprise. Council has not pursued in the past its role as a regulator in terms of levies and targeted rates and so forth. I'm not talking about the public amenity, I'm talking about the commercial activities of the airport. If we proceed today with your proposal, I do seek from the CEO, and I'd like him to respond to this, that we will use all of those tools in terms of pursuing alternative sources of funding, potentially that could go into the Auckland Future Fund or it could go into other activities. But I want to know, because I understand that you haven't pursued this in the past, but for the commercial activities taking place on the airport footprint, what aspirations and what advice will you bring to us as elected members on those opportunities that exist in the airport on the commercial activities only?
If I understand the question correctly, you're talking about potential revenue sources other than our normal rating tools, correct?
Yes, because there could potentially be targeted rates, there's other levies. And again, I'm being very specific. I'm not talking about the public amenity. I'm talking about the commercial activities that have taken place because there was a windfall in that land being acquired under the Public Works Act. So how can we have the assurance today, if we adopt the Mayor's proposal, that the Council will still diligently pursue the opportunities that are there for ratepayers?
The assurance I can give you is that we can provide the governing body with any advice that you wish in relation to pursuing matters such as you're describing. I have to say I don't think that's particular to the airport precinct. You know, that matter arises of, for example, windfall gains in relation to, you know, major capital investment like the City Rail Link, where uplift could have been a revenue source for the council were it pursued. My undertaking would be to come back and give you general advice about the opportunities, including the airport precinct in that regard, but it effectively becomes a rating policy discussion for you.
I would appreciate that, because Auckland Council Investments was dissolved by a majority, a slim majority, but that was raised on a regular occasion by ACIL before it was abandoned. And I think it's something we should pursue.
Thank you, Councillor Fletcher. Councillor Walker, please.
So, got a few questions. They're financial questions, essentially. And the first one just goes to the Future Fund, and it goes like this. Would it be fair to say that the success of the fund is dependent on the fund generating a return that's better than our cost of capital or cost of borrowing over time?
Yes, if the fund didn't earn a decent return in excess of cost of capital over the long run, it would not be a very successful fund.
And as far as Auckland Airport is concerned, going forward, is it correct to say that the airport's in a recovery mode post COVID? So previously you had a fairly dire situation where both domestically and internationally, you know, business was down, but now it's bouncing back and it's actually on a growth curve in that respect. Would that be a fair comment?
Different people will have different views about the future prospects of the airport. There's many investment analysts that look at that and have different views. What you've articulated may well be a reasonable view, but we're not in the business here of speculating and trying to second guess that. We look at the market share price and the dividend projections. So
Sure.
we just follow what the experts are saying and where the market is at.
Sure. I think the last report from Auckland Airport was back in February, and the substance of what I'm saying was in that report. I'm assuming we've got some familiarity with that. So the other question I've got just goes to the charges that the airport is able to make because it's subject to regulation both in respect of its domestic prices and its international prices. And is it correct to say that those charges are going to be going up significantly in the future, and they've been forecast?
So our understanding is that's the subject of ongoing work, both between the airport, its airlines, and and the regulatory body. Any information that there was about that in the public domain will have been built into both the share price and the experts' projections for dividends.
The other question I've got just goes to the nature of the stock, and it goes in part to the response to the question that Councillor Watson asked, and that went to the very significant increase in value of the stock. Would you characterise the airport as a growth stock, as compared to, say, an income stock? Obviously, it generates income, but how would it characterise over the last 10, 20 years?
We're not the experts in this space. Obviously, over the last 10, 20 years, the capital has grown. The income has been low, so the dividend yield has been relatively low. So, if you were to categorise it against other stocks, it would not be a great income stock because it's got a relatively low dividend yield.
If you were to characterise the stock and its performance pre-COVID, both in respect of growth and income, how would it rate as a stock? I mean, is it the sort of stock that you'd be advised to hold or sell? And obviously, I'm going back a little bit because we've got this anomaly over the COVID period and post-COVID for a couple of years.
I think it's the stock has performed well historically. The question is, what do we do going forward? The proposal here is to diversify the investments and appoint professional investors to make good investment decisions.
I mean, the other question I've got just goes to diversity of funding. If we accept that it's desirable for the council to have some assets that are more liquid as compared to some assets that are illiquid, does it follow that the assets in this wealth fund are going to be largely illiquid because we're not going to be able to sell them down at all, as compared to our investment in Auckland Airport, which we could choose to sell down on at any given point in time if we wanted to?
So we cannot just sell down airport shares whenever we want to. We can only do so if that's provided for in a long-term plan. So we must, if we wanted to sell any airport shares under the current arrangements, we have to first undertake an LTP amendment, full public consultation, before we can sell any shares. So that's not a very liquid investment in that sense. The intention for the future fund is an investment in things like stocks and bonds, and those tend to be quite liquid by their nature.
So my follow-up question is, sure, we've got to go through an amendment to the long-term plan, but we could do that within a year, couldn't we? Or maybe a little bit more than a year?
We could do that within a year. That is, again, not considered a very sort of short time. That's quite a long time frame when you're thinking about liquidity.
Sure, and that would compare with the future fund where we're not going to be able to because we effectively want to lock it up.
I think the Chief Executive would like to respond to that a little bit.
Your Worship, it's just a bit of guidance to the meeting. I don't think it's actually appropriate to put the staff in the position of speaking, for example, in the manner of a broker or a fund manager. And I don't think anyone has ever made the statement that the airport company is not a good investment. The argument is about it being effectively our only investment and the merits of having all our eggs in one basket. So just to kind of record that, Your Worship.
Just to follow on, I mean, this got nothing to do with any arrangement other than just whether we can sell an investment in the airport as compared to funds that are locked up in a wealth fund. And there's a sharp difference there. And I was just trying to seek a response to that. And I think I've got that, if that's okay.
Okay, thank you for that. Well,
So I had one last
Oh.
question, and that just goes further to the question that Councillor Lee raised, and that is, have we done some analysis of the value of Auckland Airport? And by that, I mean looking at the underlying value, the value of the real estate, the return on the real estate, the various assets that it has. And the reasoning behind that is if you don't do that, you haven't done your homework. And there are lots of examples where astute people have done that analysis and then invested in a company and realised significant gains because assets, they could have been forestry assets, they could have been all sorts of things, weren't actually valued according to what they're actually worth. Have we done any of that analysis?
So through the chair, so on page 595 of the agenda, that's page 218 of the staff advice. It sets out the objectives of these decisions and how we have assessed them in terms of our legislative requirements around the advantages and disadvantages of the options against those particular objectives. And that was also included in the consultation material. And as I mentioned, that is the test for our legislative obligations there.
My question is not around consultation. My question is just around assessing value. It's a financial question.
So to that, there's two parts to that question. I think the analysis and assessment done both in terms of this long-term plan, but also in terms of last year's annual budget for the initial proposal to sell airport shares was quite extensive and went through both financial and non-financial reasons why we may choose to hold or not hold shares in Auckland International Airport. In terms of underlying assets, etc., within a listed company, all of that analysis is done by the market as a whole, by people who are more expert in this, and the market share price builds in all of that underlying information into the share price.
Does that mean that we haven't done any analysis ourselves around the question I'm asking? And I mean, yes, you can say that the market builds it in. There are many cases where the market doesn't build it in, and you've got stocks that conceivably could be significantly undervalued compared to their true worth. So, have we done any analysis along the lines that I'm suggesting?
I think the officer advice is reflected in the forecast dividend stream from the airport holding versus the managed fund.
Sure, I'm not referring to the dividend yield. So I'm assuming the answer is no.
We've not done a formal business evaluation based on underlying information. We've relied on the market's evaluation by investors right across the market and the evaluations they've done when trading in airport shares.
Okay, thanks.
Okay, thank you. Councillor Leone, please.
Two very quick questions. The first one's just regarding the airport shares and mana whenua. So with the process, if, for example, they are transferred into the future fund, similarly to last time, given that the original landowners were mana whenua, is there any possibility of them having the first right of refusal with sale? And if so, what would that process look like?
So I think it could look similar to the process last time. The only sort of difference is this would be within a trust arrangement, and the trustees would have to make certain decisions as part of that. I wasn't that close to the process last time. I don't know if others can comment on it, but that would, it could be similar to last time, but with other layers of the controls and governance wrapped around this particular fund.
Okay, and second question is just around the development contribution, so probably more a question for Andrew. Do local boards have more of a say on how the DCs are spent moving forward?
The council sets its development contributions charges based on the capital investment decisions that the local boards and the council makes. So that's a council decision that's taken after capital investment decisions are made. Development contributions will fund the growth share of both council and local board capital investment decisions, and the forecasts of that are included in the budgets and provide an element that contributes towards your decision making on debt and rates. But it is a governing body decision after the investment decisions the boards have made.
Thank you.
I think the answer was yes. I've got a last question, but what I'm going to do is take this and then we'll have a lunch, because then we'll come back and we'll tackle questions on AT, because we've been questioning on every other thing this morning, and we've had a big range of questions on a lot of things, including a lot of fairly similar questions about one or two things, but you had a good opportunity, and that added on top of 120 hours of other questions. So,
Councillor Bartley wants another one.
Pardon?
Councillor Bartley wants another one.
Oh, Councillor Bartley wants another question. Good-o. And then
Deputy Mayor.
and then the Deputy Mayor, and then we're going to have break for lunch and come back and talk about transport, of which there'll be plenty of questions, and because there has been some changes in that. I mean, largely the rest of it hasn't changed for months, and we've heard the same questions quite a lot of times, really. Councillor Bartley, please.
Oh, thank you, Your Worship. I just wanted to ask about housing and growth infrastructure, and how your proposal really is dependent on government coming through with its support through that Housing Acceleration Fund and the 40,000 homes that are already being built in our city. So how confident are you that the government is going to come through with that funding that we need in order to continue the Auckland housing program?
That's like asking how confident I am about the weather. I can only take it from what I've heard from pre-budget speeches that one of the areas that the government is quite well aware of is the housing shortage, and they are committed to supporting Kaingaora at this stage. So I think if the government doesn't put that through, then the demand for that, our share of the funding, won't rise anyhow, because it's the amount of money we've got to put into this is as a result of increased housing So if they don't build the housing, they won't be providing it and we won't be needing to either. I think I'm trying to put it in there as it is so that the government expect that there is pressure on them to deliver their share. Is that okay, an answer? I mean, it's very hard to predict the future. Predictions are very hard, especially about the future, I've found.
Yeah, okay. It's just that we saw with the floods, the effects where infrastructure isn't quite catering to the needs of the communities where we've already built so many houses and put so many people. So it's vital that they are coming through with this.
Well, it'll be something that we'll be debating with the government forcefully to meet their share. Let's say that. And I am expecting a good level of support from councillors for this because it's in our interest that we get the government to meet their share if we're putting money in. Okay, so all of your continued support for this is essential, I think. So it will be us as a council. Now, Ross?
To just comment, at an official level, we've done lots of highly collaborative work with KO and the Ministry of Housing and Urban Development in terms of lining up the infrastructure project programs, funding arrangements. We've sort of signed framework agreements. We're all good to go. All that needs now is that government, ministerial level support. We've had lots of discussions, but they won't give us any kind of clear steer one way or another until after budget announcements. So we're waiting to hear.
A good question, and of course, unlike us, the government actually doesn't do consultation over their budget. It just pops up. Councillor, Deputy Mayor, and then we're going to abandon this for a wee bit and have lunch and come back and take questions on Auckland transport. Thank you very much, Councillor Deputy Mayor Simpson, and then we are definitely going to break. Thank you.
Thanks, Your Worship. My questions are just questions for clarification, listening to some of the councillors ask their questions. So just a couple of things I want to ask, which are quite specific. And one is around the Future Fund. So legislation aside, right, noting that we don't do that, does the Future Fund provide stronger protection against a future council raiding its value through the trust deed than the current situation from day one?
Yes.
That's excellent, thank you. And then the second one is around us just being sort of fiscally responsible. In terms of your discussions with SNP, do we still need to exercise some constraint to keep our high credit rating?
Yes, the rating agencies assess our financial management and our metrics, and they do that periodically. So yes, absolutely, they will be constantly looking at us, our constraint and our prudent financial management on an ongoing basis.
Yeah, so Watercare aside, they're still doing that. Great.
They will continue to do that. They will always assess and give their view on how prudent we are being.
Thanks, Your Worship. I just wanted to clear up those 2 points. Thank you.
Righto, that's clear, and lunch is now going on, and we will try and get back here as close to 1 o'clock as we can. And we'll recommence with questions pertaining to transport. AT will be present. Thank you very much, ladies and gentlemen.